this imbalance here.
Mm-hmm.
Let's say this imbalance, right?
Yeah.
Now, the market wanted to use this imbalance for a continuation for buys, but that buy was short-lived.
Uh-huh.
Afterwards, the market just slumped and disrespected that imbalance. So all you're looking for is inside here, literally inside here. You're looking for imbalance right here that you will use for a sell, since the market has disrespected this. And can you say that it came and gave you an imbalance here? You mark that imbalance that it has given you here.
Yeah.
Now you can align the time frame. You can go to 4 hour, another imbalance, and you can even go to 1 hour and 1 hour inside there. There's another imbalance, but price rallied above that imbalance slightly. This is something very normal. They do this intentionally because they know that there are traders that what they do. There was this guy I was teaching how to trade, and he told me that what he used to do was once price comes into an imbalance like this, taps it a little bit, he will start selling massively, selling, opening so many positions. And then he'll be looking at the trade, and price will be going deep inside the imbalance. And then once price is very close, like it's literally covered the imbalance, he'll just close the trades in a loss. And then the market will literally do something like this and then go towards this direction.
Yikes.
So, it's funny because the algorithm was designed to be this way because they know that this is something traders are doing. So
Uh-huh.
they are doing everything to catch us out and make sure that we all don't make any money. So that's why you always have to think outside the box. You have to wait for confirmation because price can still come in here and still just not work for sales. That can happen. But going to what we were talking about, so right here, all you just want to see is your time frame break of structure, whether you want to use 5 minutes break of structure or 15 minutes break of structure. Let's look at 15 minutes first. Now on 15 minutes time frame, this is the low, this is the high. This was the break of structure, but it didn't give you a good retest. So let's look at 5 minutes and see if 5 minutes give a good retest. Now, the point of doing time frame alignment is because it will give you a better entry. And a lot of the times when even the 15 minutes, 30 minutes won't give you an entry, you'll still be in the trade. Now you can see that in this case, this is the low and this was the candle closure here. This was the candle closure right here. And price came back and gave you a perfect retest here. I don't know if it's making sense.
Yeah, I see the perfect entry. And I'm also looking for the second one. Because is there one here too? Let me
Yeah,
see
it
here.
also give you another entry because
This
let's
right
say
here,
right
is
was
that one?
no, no.
Oh, it's not. Okay.
So now what you want to see is same time frame break of structure when price came up here for a retest. Let me remove these lines because there's too much lines here. So now this was the break, the candle closure. So this is your first entry, your stop loss here, add a few extra pips above. Now what you're looking at is this candle coming back for that retest. You're looking for a break of structure on the 5 minutes here. And this was the break, the low. And can you see that after it broke and closed, this gray candle came back and gave you a retest?
Oh, yeah.
And that would have been a perfect retest to get in. Stop loss above here, add a few extra pips. Here would have been your second entry. Stop loss here, 11 pips, add 5 pips. That would be 16 pips. And you can take your take profits, could be 1:3, 1:4, target and inefficiency. And price went straight to that, went straight and delivered. Even though it was quite zigzaggy price action, because this one came up to take liquidity. And after it came out to liquidity, you can see how it took liquidity and then continued lower. And right here, after it took this liquidity here, it broke structure. It's here. And look at this structure it broke. It dropped down, created a high, broke structure, This would have been your entry. Now, this entry wouldn't have activated you. Do you know why?
Fair value gap.
Exactly. So the fair value gap here, just that's something to always pay attention. Just be
Mhm.
very mindful. If there's a fair value gap before your entry, then that means you need to move that your entry. Else, price will use that fair value gap as resistance or support and reverse.